In this video I'm going to look at proving something that you want to happen as opposed to analysing the markets from an independent viewpoint. What I mean by this is when we're trading sometimes we have a technical view on the market, and we almost want to push our will on the market and do something that we would like to do. So when a market's falling and you want it to be bullish, you'll look for the reasons why. Well, this is the bottom or the near bottom, or this is a great support area, because you're looking for the market to move in the way you're used to and would like. However, the markets don't really take a lot of care about us, and we do this at our own risk, and it can be a very expensive risk, because I can see reasons. I've drawn a trend channel here between the low here and caught the last week's low roughly, and then just popped it on there. So it's a sort of an okay fit. In fact, the mean of those two trend lines sit carefully, nicely with what was happening, and I would argue pretty well actually where the mean is, this line in the middle here was a much better trend line than the current trend line. So by drawing it across these two lows, this low here has very little significance in my book, and the reason I say that, in an upward trending market you're looking for higher lows and higher highs, and this won't actually be of any significance here until we've started putting higher lows and higher highs. In other words, I have to be seeing a price action for this to be a low to count as meaningful. I need to see a low which is higher and it's taken out the prior highs, and so on. Each time we're getting higher lows, higher highs, price is going on. I'll show you what I mean in a little bit more detail. In fact, what I'm going to do here is I just pressed the wrong button. Let's just turn that off for a moment. Let's just expand this so you can see the price action and understand what I'm talking about. When I'm looking at a trending market, I'm looking, as I say, for higher lows, higher highs to see if it's trending. At this correction point here, well, it looked like it was selling. It didn't give a great deal of. It gave a little lower high in the midst of things there, corrected, and then started reversing. This is a low and a point to draw from. Didn't for me become significant for the high side until we broke that prior high. And let me draw it. Let me just go back a step here and show you the closer ones. So when you're in an upward trend, the significant points to draw the trend lines on, well, this is fine because we've broken the high here. This high has been taken out, so this is fine. And eventually these lines here, they're fine because we've broken the lines. So this gives us the options to be drawing trend lines. So I can now draw some trend lines on there. It's going to be let's just change the system over here. So we now start drawing trend lines. So the original trend line was here. A corrective trend line could be any of these. So this would have been the trend line, and it's fine that what you're looking at in the future. Now I say a corrected trend line because the original trend line was there. It broke that trend line. So when it does that, does that mean to say this market's falling? Not necessarily. It didn't start putting lower highs in. So at this point it tried to, but it didn't give a higher low there. So at this point, as it starts pushing up again, I can actually move this to those more significant, and I can put them right across to this point here, and it's still in an upward trend. It's not changed trend. So that is a significant level, and there's significant lows where I can put the trend lines onto. However, when it starts turning course, I can't start, or shouldn't start, putting it across to these next points. I know people will, but just as we're looking at the current situation, at this point here, there would have been a lot of traders looking at this point to be drawing to, because we had the upward week there. Let me just expand this a little so you can see it a little bit clearer. There you go. So we had the upward week between them. So on that basis, they would be drawing across here, and this would be their significant trend line, and they would be looking to potentially buy off the trend line, and it confirms that it's still in a trend. Unfortunately, using my methodology, it's not giving us a higher low at this point. So the trend at this, or using this as a trend line, isn't. It doesn't work in my system of trend line drawing. So it doesn't work because we haven't made a higher low from it. This is then, so popping drawing lines across here, and we all do it, and I do it during the day sometimes. I'll just put it across there. Normally though, because I want to look for the break to sell, not because I want to buy it. Putting it on here as a trend and waiting for that to sell is perfectly fine. It's perfectly fine on that basis, because you're not looking for it for support. Where you're looking for it for support, you've got to be looking at high lows, high highs. And to be fair, actually, if I drew that across here, these levels here have arguably, actually there's probably the first one, this one and this one has found support off of this original trend line that was drawn, or secondary trend line, beg pardon, that's drawn there. So that's fine. Anything that we put across here, I'm only ever looking once it's broken, and at this point here, you can't really argue any other way that this trend's over. Yes, I can see the price action, but I can see the price action further up, and I would suggest the trend's still over. And in fact, all I would look at beyond the point here now, and as I said, if you was to use this as a low, you would only be selling it on the break of the low effectively, or the break of the trend line, because you shouldn't be looking to buy it. It's worn out effectively, it's simply put. So that's my ruling. So on the basis of this current price action here, however you look at it, it's actually putting lower highs. So I can't, what would have stopped me from popping it here, which is probably wrong. None of those levels. The only level that is significant and is this one here. When it broke from that point onwards, actually, maybe you could argue for this one. So I'd allow that, because it had put well, it hadn't actually put a higher low in at all, but it had put a higher high in between the two. So again, personally, I'm really looking for a sell point as it breaks the trend line that time. It's weaker in a weaker scheme of things, and really, okay, more conservative approach would be to sell it down here. So what I'm seeing in this current market is a series of lows. So I shouldn't really, that just gives me a series of lower lows. So that really gets me looking at it, and the way I believe it should be drawn. And as I say, this is the methodology I use. Different people may have different ideas, and I see some weird and wonderful things. And if it works for you, that's great. And sometimes it will do, for sure. Here's the current trend somewhere. Well, I don't know. It's hard to. I mean, this is a falling trend. It's breaking out the bottom. But again, with channels like this, in a descending channel, the bottom line has no, I mean, we can call it support or whatever else of a channel, but it doesn't offer a lot of support. There's no reason. It has little significance, and it really depends on where we're drawing it. I mean, I could have been drawing it up here somewhere on the first sort of lows here, but actually probably the better one is we got a lower high here, which is fine to draw off of because it's broken the lows, so that's fine. We've got another low. Well, I won't be initially trying to draw off this, but we've got this lower high here, and it's been broken. So that is a significant area. So if I was to be drawing and wanting to put in a more aggressive trend line, which I'll do. So I was looking for a closer time trend line. I'd be drawing it across here, because somewhere around there. Let's just put that on the highs there. So that would be the more aggressive. I say more aggressive, but that's where it's running in at the moment. As much as we'd like to see it doing other things, and yes, we can move these channel lines down to make us feel better about them doing something we want them to do. Sorry, I'll just go from the right point there. There we go. Doing something we want them to do, but it doesn't really matter. They don't provide as I say, the opposite side of a channel doesn't provide a lot of support in this case, and resistance if it was on a rising basis. Price can just as easily push out. This most significant line in it on any trend line or channel is the line where we've got, in this case, the lower highs showing. So these are significant points. On the upward side here, as I demonstrated earlier, these are the significant points on the upside. As soon as it breaks here, it's definitely in a downtrend, and it's accepting that downtrend. I know we want to find support for something often, and this may be a case of wanting to find some support into this bigger move, but it's largely risky, and it's a case of, I would argue, why do you want to find the reason to find support unless you're looking for areas, well, where's my targets, and okay, you might do that, but you'd be a lot better off just looking horizontally across there and waiting until the market starts showing you maybe a higher low amongst all this. So there we go. It's looking at it, as I say, my way of drawing trend lines. I find them pretty powerful a lot of the time, not always, but anything can be broken on a piece of news or anything like this, but what it does do, it gives me a decent read on the market. So it doesn't, it's immaterial where the bottom channel goes here. It may be that I'm so wanting to put a channel on, I'll draw it over there somewhere because there's a couple of points, and people argue, oh, you need 2 points, but it's broken it anyway, so it doesn't matter really well. Put it there, or there, it's a broken channel, just as I would have been looking at as the market was pushing up this way. It would have been, as this is happening, it starts becoming a broken channel, which all you're trying to do is prove something to yourself, I don't know, but prove it's going the way you want it to go. As I said in the first place, we look at reasoning to prove what we think is going to happen. So there we go. Just my spin on things here. I think it's important that you look at this and look at how you draw trend lines, but keep an open mind. There are pivots on the back of this. I wouldn't be the pivot trader if I didn't have some pivots running around. These are only annual pivots, yearly pivots, but there are some pivots kicking around there. But aside of that is and a moving average. There's nothing hardly on this chart, and that's how I like it. You've got to look at price. And I was sent a really nice chart, actually, nice and clean, and it was being looked at in the right way, but not necessarily read in the right way. Reading as if you want it to happen. So there you go, little lesson: drawing trend lines, making things fit what you want to fit, as opposed to making things or showing you things that are actually there. Hope you find this useful.